All right, we got the hot one sprinkles. My mouth is on fire, by the way. Got Verde hot ones. Um, my mouth is coming right now. Give me 1 second, folks. Woo! I gotta put a chat in here. All right, I'm going to put that one out real quick. A little disclaimer: as an Amazon associate, I earn from qualifying purchases. Just want to say that. So any links that you click on the description, if you purchase anything, I may receive a small commission at no additional cost to you. So boom. All right, let's roll. It's a big May, and it's nice that there's no additional cost. All right. So we're going to talk about ETF allocation theory. Now, this is kind of a guide for people who hate capitalism. I love capitalism, but this is made, even if you're somebody who doesn't like investing. I don't like looking for a job if I have to, but I do it. Look, there are things in this world. Socialism is actually the most unfair system in the world. So is communism by all stretches. If you think about it, there's nothing more unfair than having somebody surrender their wealth to somebody who isn't doing anything. There are exceptions to this rule, however. People who actually have, had a shit draw in life, that happens. But for those who are wealthy, it should be their choice to donate if they wish. That's my capitalist mindset there. And you know what? If somebody wants to be selfish, let him be selfish. That's just the way it is. If they created a product or a service and they made a lot of money off that, or if they invested and took on some risk and made a lot of money off it doesn't matter. Like, them shining brightly and doing well in life doesn't diminish what you've been able to accomplish. And if you haven't accomplished anything, that's your fault. Anyway, so that's the one thing about capitalism. It's about accomplishment. It's about providing products and services. And if you can't create any products or services, that's okay too. Maybe you can sell those products or services. A lot of our economy is based on products and services, and that's important. It matters. It really, really matters. Whether it's food, whether it's, you name it. It's a lot of core industries out there. It's a little hot in here, though. I'm going to open up another window to make sure there's a bit of a cross space in this place. One moment. All right. I figure if I'm gonna be eating these hot ones chips, I might as well be doing the right thing. A McDonald's bag. No. All right. The question I want to ask myself is anybody watching? Oh yeah, and I gotta also enable monetization on this derp. If I was a smart man, which I'm not, I'd put some damn monetization on this shit. There we go. Now you guys can be annoyed by ads. Here we are. One more moment, folks. Just doing the Diddy juice. Oh wow, nobody's viewing. This is for people who hate capitalism, by the way. So, um, yeah, no, the reason I'm doing this is just so that way you guys have a better idea of what the best type of ETF allocation strategy could be. Now, you obviously want to talk to a financial advisor. That's the smartest thing you can do. But here is my ETF allocation theory, and there can be some tweaks to this, by the way. I don't even care how my portfolio is weighted if we're going to be truthful. So this is kind of a hypocritical list for me to make. But if I gave a shit about weighting, hypothetically, then this is how I would do it, in theory. I'm pretty spread out, though. I'm mainly in stocks, international and domestic stocks, equities, I guess you would say. So here is the finished product. So, my ideal weighted portfolio, just diversified across all asset classes to the best of my ability, is 10% covered calls. That's covered call ETFs, where the ETF itself does the covered call strategy for you, and you don't actually have to do it, which is nice. 30% U.S. stocks is So if this is a long-term portfolio, just pure buy and hold. So 80%, 20% of my portfolio is actively traded, but 80% of it is buy and hold forever. On the buy and hold forever portion of this portfolio, the 80% part of it, this is what it would be internally to a 100% degree. So like I said, 10% covered calls, where in a nutshell, what a covered call is in these covered call ETFs, they typically buy the shares they need to buy, and then they write call options, and they sell them in the market at a premium. Somebody buys it, and then once they buy it, you get to collect the premium. Now, however, you are using your own shares as collateral in these theories. Well, I should say the fund is using the shares in this because you're not really doing any of this. The fund is doing it. Now, the whole goal for the fund is to actually make derivative income for the people invested in this ETF. Now, there are high expense ratios, so this is something to keep in mind. The expense ratios for some of these cover call ETFs can be kind of huge. We're talking about like 0.9%. And to me, that's huge. But during a bear market, I mean, you could kind of get some nice income right there. So it's not necessarily the worst situation. Now, the only downfall is there's a lack of actual growth, especially in the 100% covered call ones. So there's like virtually no growth at all. It's only basically you're just getting premium income in the form of a dividend. So that is something to keep in mind. But yeah, my ideal one is, I think my portfolio is basically 10% covered calls anyway, if I looked at it last time, right? Now, the rest of my portfolio is 30% U.S. stocks, total market, by the way. So like VTI. Honestly, I wouldn't just be in the VTI. I'd be in all sorts of different ETFs that are domestic based, U.S. based primarily. S&P 500 ETFs, dividend specific, dividend aristocrat, you name it. I like to spread out my portfolio theory because I believe in I believe every time you're buying an ETF, you're buying a theory. You're buying a theory that is in practice, right? And I like it. I firmly enjoy investing into ETFs that have variable weighting, as long as they're transparent about what they do, and as long as they're a reputable fiduciary responsible for those exchange traded funds. It's a big deal to me. Overall, hold on. I just realized my package. Hold on, let me see here. Oh, okay. Got my breathe right strips. Forgot about these. Got the, by the way, I wear these all the time. I actually should put that for stuff that I have on me at all times. Breathe right strips. But yeah, let's see. So, Yeah, so 30% US stocks, basically just any ETF that is index based, preferably. Now, I will make some exceptions. I do have some actively managed ETFs that primarily get into like US stocks and stuff like that. So I'm a little bit of a hypocrite there. So 30% US stocks, total market to the best of my ability. So like VTI, VOO, anything US based really. I just rack up, I load up, I buy at least one share. And I also, by the way, I'm not only into US stock ETFs. I'm just into individual US stocks in general. So I'll buy one share of Coca-Cola. I'll buy one share of Realty Income and just let it sit in my portfolio because I have a very buy and hold mentality about it. Oh, we got Tim Smith in the house. So due to monetization, I have to sit through a fake AI ad where Kevin O'Leary rubs baby oil on his head. It says his new crypto algorithm will pay me weekly. I think I've seen that ad, by the way, unfortunately. That ad is so bad. I'm pretty sure it is AI. I think it's an AI Kevin O'Leary. I'm pretty flippin' sure. It's pretty bad. I'm like, what is this shit? The biggest rule is if the word crypto is anywhere in, unless the term anti-crypto is in there, it's a scam. Now, if it just says crypto and, easy money or blah, 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 I could promise you this, I could promise you the world, run like the wind, Tim. But Tim, yes, unfortunately, I do want to apologize for these ads. These are the price. This is the price that people have to pay to watch my live streams, unfortunately. It makes the channel money, though, and hey, I could keep talking about good content, so my preference is to try to make a butt ton of money off of just ads alone and try to, I want members, obviously, but I don't need members. I just need people to watch. Let's see, Garza now. So Tim Smith says Garza now at 4.5K subs. You should change the name of your channel to 4.5 soft. It's not a bad idea. Not a bad idea at all. But Tim Smith in the house, I'm digging it. So the ideal portfolio, Tim, just in case you missed it. So my first one that I said was 10% covered calls. So 10% covered call ETFs basically in the portfolio. Preferably, I like the ones that have 100, like the whole portfolio is used as collateral when they write the call contracts. So those are the covered call ETFs that I go for. It's only 10% of my portfolio. It's not like a big deal at the end of the day. And then 30% of my portfolio is US stocks. I try to expose myself to the total U.S. stock market by either buying individual stocks, by buying ETFs that are U.S. stock-based, index fund ETFs preferably, but I will make an exception for actively managed ones as well. I don't have a lot of actively managed ones, primarily index ones overall, but I definitely avoid the actively managed ones for sure. I'm a buy and hold kind of guy at the end of the day, except for 20% of my portfolio is actively traded by myself because sometimes it is fun to swing trade and get a little income for the portfolio. Now, before we move on to the next one, let's see. Tim Smith says, tell your fans, get me to 10 hard. Get me to 10 hard. I feel like this is a trick. This is a trick, Tim. I know it. Tim is tricking me. Damn it, Tim. Tim Smith also says covered call ETFs are now outperforming regular dividend ETFs largely because the fast-growing companies, mostly tech, often don't pay a dividend, so are not included in dividend ETFs. So yeah, that's one of the big advantages of covered call ETFs that expose you to that basically do those sorts of call options and use those tech companies as collateral. So it allows you, in a sense, to get some sort of income from the tech companies, and you don't want to sell the stock, right? That's the beauty about tech companies, by the way, is their volatility sometimes. Sometimes the world is with them, sometimes the world is against the tech companies. I've seen a lot of ups and downs in the market. So yeah, covered calls are a great way, especially if they're using tech companies as collateral, could be a real way to make some nice derivative income for sure. Because I guess like Tim said, tech companies don't actually pay a dividend. A lot of them do stock buybacks for the most part, but like they won't actually give out dividends to their shareholders. So sometimes cover call ETFs are one of the better ways to go if you want to get just a little bit of income from your stocks that don't actually pay a dividend. And I have a lot of stocks that don't pay a dividend and a lot of stocks that do, mainly dividend paying ones preferably. But Barks root beer, by the way. Here we go. But yeah, overall, so 30% is US based, all right? And then 30% of the portfolio is international stocks. So basically expose yourself to as many international stocks as you can. The easiest way to do this, because you really can't buy one share of too many international stocks on the New York Stock Exchange. So one of the better ways to expose yourself to international companies on a broader scale, and one of the best ways, is honestly exchange traded funds right through your brokerage account. There's like 15, 16, 17 international ETFs that I could think of, well, not off the top of my head, but that I have in my portfolio that exposes me to international companies. And they're index ETFs, by the way. None of them are active. Well, I think maybe one or two are actively managed. But like for the most part, a lot of them are index based. So yeah, it's 30% international stocks. And that's like I said, you want to make sure that like VXUS is a great example. It's the Vanguard international companies excluding the US. So basically it's every other country except for the US, which is perfect because if you live in the US, it's tough to get a hold of like for instance, it's actually a lot tougher for me to get a hold of Canadian companies. It's a lot tougher for me to get a hold of Chinese companies. ETFs are one of the better ways to do it if you want to have international exposure to different international companies. Also, international companies pay one hell of a dividend a lot of the time because they want investors. Now, that's one of the reasons why a lot of these international ETFs actually pay a pretty decent dividend from time to time. So I love having international companies in my portfolio because you never know. Maybe the U.S. will fall in some hard times and the rest of the world will do really well. We just don't know what the future holds. But before I go through the rest of the list, we've already covered 70% of this hypothetical 70% of this hypothetical portfolio, which honestly, it's pretty close. This is actually fairly close to how my portfolio is. My weightings are not exact, obviously, but I try to keep, for the most part, even though I don't really give two shits about my weighting on there, I do try to keep fairly reasonably close to these. Let's see. Tim Smith says, yes, you can hold Bitcoin and other cryptocurrencies in Roth IRA, but you can't directly contribute cryptocurrency to the account. Interesting. Hold on. So you can hold Bitcoin and other cryptocurrencies both in a Roth IRA, but you can't directly contribute cryptocurrency to the... Interesting. Oh, okay. Huh. Interesting. Are you talking about like the Bitcoin ETFs and stuff? Because I think the I don't know, those Bitcoin spot ETFs, man. I don't know. Tim Smith says, how can I tell if my international stock is legal or undocumented? Don't let ICE deport my... Well, luckily for you, they're not actually in the U.S., but, you know, I will say this about international companies, and this is one of the reasons I'm broadly diversified in international, is because I don't know how many pieces of garbage companies are actually out there. So I will say that I've got probably, if I was to guess, exposure to about 12,000 different international holdings, maybe even more than that, because of the ETFs, the international equities ETFs that I hold. And like I said, that's roughly 30% of my portfolio anyway, is international. I think. I could be wrong. I actually might be a little bit off on that. I've been trying to get more exposed, though, to international stocks overall. Because I felt like my exposure, though, was kind of weak in a lot of ways. So I got to be diversified across the board, man. That's really my my key overall. All right. So, um, oh, I'm hopping. I'm a hopping. I'm a hopping. I'm a hopping. Let's real quick though. Tim Smith says, "Holy crap, Flower Foods is down 25% this year." Time. Oh, really? Hold on. Well, let's bring up Firefox real quick. I'm gonna take a look at this real fast. We're gonna take a look at Flower Foods because anytime Tim Smith mentions a stock, I do like to pull it up on the screen when possible. If Firefox will load, which is sometimes impossible. All right, so let's see here. Okay, let's take a look at Flower Foods. I'll put it up on the screen here in just a second once I get the sure, I'll allow it. I want Google to know where I'm at. Flower Foods stock. Let's take a look here. Here we go. I do love that Google has some pretty good financial readouts for the most part. I actually like Yahoo Finance a lot better though. Yahoo Finance is probably one of the better ones in my opinion. Let's go to display. Here we go. Flower Foods. We got Flower Foods up. Let's see. 1590. Wow. Whoa. Well, I mean, they were up to like. Okay, that's only in a day. Let's look in the last year. So we're taking a look at Flower Foods real quick. So last year, 2367 was probably 2368. What I'd say would be their highest in the last 365. So they've gone down 28.06%. Oh wow! In the past year, I swore I had Flower Foods in my portfolio. I might have forgot to purchase, but hey, if I did, I mean now's actually a pretty good time to buy it. Any indicator on why their stock price is down? I mean their PE, that's a low PE ratio, by the way. I'm kind of curious though what I like to kind of look at the Morningstar reviews real quick because Morningstar is always interesting. I don't actually have any shares of Flower Foods. That's insane. I thought I did. I guess I never did buy it. I usually only buy a share of every stock that I get anyway. A lot of the analysts are saying to hold it. There's a lot of insiders that purchase it. Hedge funds are buying. Well, interesting. I mean, I was going to say, overall, their earnings look pretty good. They're not a bad company. They're paying a 6% dividend right now. That's crazy. Well, 6% annual. That's what happens when the stock price goes down. Now, I'm curious, like, what's the reason for the shitty... let's see if we can find anything on, like, Google News real quick on why Flower Foods is doing so shittily. Less than modern 2.0 indicates patience when it comes to debt. So it's got kind of some debt, it looks like. Major U.S. bakery leader Flower Foods announces Q1 revenue player. I mean, it's a good company, man. Yeah, I was going to say Flower Foods. The Seeking Alpha article saying it usually isn't as cheap. Shit. Oh, man. And then Tim Smith is saying General Mills down 20%. Also, a lot of food companies are down. Yeah, a lot of these companies. I mean, I think I do own these companies through quite a few different ETFs. So it's not like I don't have exposure to these companies in some capacity, but it would be nice to have at least one share of them in my portfolio because I do like to buy one share of every company I think is halfway decent. Worst case scenario, the company just is mediocre a lot of the times, the ones that I purchase. But I really just load up on index ETFs for the most part. It's kind of the goal, at least. Let's see. But yeah, overall, yeah, so 30% international though, I will say that. Let me just do one more real quick and I'll read the rest of the comments. We'll keep going here in just a second, but now we're into bond territory. So we've already covered 70% of this hypothetical portfolio, 10% covered stocks, 30% US stocks, 30% international stocks. Now we're going to go 7.5% US bonds. Now, this could be any kind of bonds. Now, it's a good idea to be fairly evenly dispersed in the type of bonds that you have because you want to make sure that you're at least spreading out your risk to some degree. So there's a lot of different bond ETFs out there that you can get. So don't be shy when getting bond ETFs. If you want, you could stack up on one particular one. One of my personal favorites is BND. BND is actually a pretty solid bond ETF because it pretty much gives you overall exposure to the bond market in the U.S. Alone. But yeah, that's one of my favorite U.S. based ones. But yeah, there are other ones I have. I mean, I have tons of bond ETFs overall. I don't shy away from bond ETFs. I'll just say that. Jack's Cab Confession says, Mr. Garza, it's your most hated viewer. Fuck BTC. Oh, okay. Why would you say that? Jack's Cab Confessions, it is good to have you on here. We'll look at, actually, let's look at Tim's comment real quick. We'll, let's see. Tim Smith says, increased costs for materials, labor, and other production expenses. Additionally, in navigating a competitive landscape with shifting consumer preferences and the impact of GLP-1 weight loss meds. Interesting. Oh my God. Did you come up with that pattern on your own? Because if you did, that might be one of the most brilliant analyses I've ever heard. That's really a good analysis, man. By the way, everybody, Hot Ones Pringles. These is the Verde sauce. Look at that. So I'm gonna eat these. I'm gonna eat these while talking. These are actually pretty good. They definitely got a kick to them, that's for sure. Tim Smith says, no, that was one thing I read about flowers. Yeah, a lot of people are taking like Ozempic and shit, or whatever generic version of Ozempic they're getting their hands on, because I hear that Ozempic's pretty expensive overall. Yep, this is Hot Ones Pringles edition. We went to the beach earlier, and then we went to one of the grocery stores, Lighthouse Grocery. It's now American Market, but got this, found this over there. I'm gonna have to go to Walmart and see if they got more versions of these somewhere. They're pretty good, I got to admit. All right. Okay. But that's an interesting analysis, though. And hey, honestly, people are going to get tired of taking those weight loss drugs anyway. They're going to get back to their old habits of eating sugary foods and, sugary cereals and stuff. So I think it would be a good idea, in my personal opinion, to start loading up on like General Mills. And this is not financial advice, but anyway, this is what I'm thinking about doing, though, myself. I'm going to load up on Flower Foods, General Mills. Was that honestly, if you can get them at a cheap buy, why not? Tim Smith says BRB about to watch a Lily cop. Cops do nothing. Oh, jeez. Holy smokes, man. I'm not going to read that comment because I feel like YouTube would try to ban me for reading it out loud. But If you guys take a look at Tim Smith's comment, man, holy shit. You guys, make sure you guys check out my affiliate links. They're pretty sexy. And I do get a small commission. I will likely get a small commission at no extra cost to you if you choose to buy anything in the description. So. Mm. Oh. Ooh. All right. So I did say 7.5%. Dookie Pie says, yo, what up, Chipaholic? Hell yeah. These Verde chips are pretty flipping hot, man. Oh, I'm feeling it on my tongue, brother. So then 7.5% international bonds. My sinuses are clear right now. Yeah, so 7.5% international bonds. So definitely take a look at any, ETFs that expose you to international bond markets. That's really, really important. All right. For the final part, these chips are hot. For the final part of this portfolio allocation is 15% commodities. And when I say commodities, I mean various commodities. Gold, silver, oil, soybeans, you name it. Get exposure to ETFs that give you exposure to the commodities that are valuable. Me personally, I like gold. I think gold and silver ETFs are great. I definitely try to avoid the ones that send out K1s. I hate K1s. So I avoid the ones that send out the K1 forms for the tax season. I freaking hate K1s. Yeah. And that's it. The thing is, you can never be too diversified. Overall. I mean, this channel's really all about diversification at the end of the day. That's all there is to it. Let's see. Jack's Cab Confessions says, oh, have you encountered any challenges or potential downsides when investing in ETFs? I think the only downside is that there's expense ratios, but usually the expense ratios are so low that it's really negligible. The only downside I can think of about ETFs is that the shares that the fund holds are technically owned by the fund, but if you own shares of the fund, you're an owner in the fund, so therefore you do technically own the shares. It's a weird process. So even if the fund goes away, you do get, even if the fund were to liquidate, you still get paid out whatever the market value was for the shares that you had. So I never really fear, even if liquidation happens of an ETF, you're always covered in some capacity. These are really killing my tongue. I'm going to try to read these comments. Well, I'm eating these chips, dude. My face feels like it's getting red. Tim Smith says, I had the same problem I had with ETFs as with voting for Trump. I actually got tired of winning. Oh, man. Hold on, guys. Oh, frick. Here's another one. My man. My man. Oh, man. But yeah, the best part, Ultrafire says, hey, son. My man. Thank you. Ooh. My eyes are watering a little bit. That's a little too much Verde. Ooh. I'm going to go for it more. Okay. Oh. Dookie Pie says, bro, you must be single. I dig it. I'm not. I got a girlfriend who loves me, even though I'm a weirdo. She loves the hell out of me, and I'm grateful for her. Oh. Oh, man. Jazz Cab Confession says, given your interest in ETFs, how do you see their role evolving in the broader investment landscape? I mean, they've evolved a lot. There are way more ETFs nowadays than there were even 10 years ago. So, not only are there basic index ETFs, there's like covered call ETFs, there's actively managed ETFs, there's all sorts of weird strategy ETFs that are out there. I call them hybrid ETFs. So there's a lot of variations. ETFs have definitely evolved over the last 10 years, that's for sure. But they're great. They're a great way to get into things where you normally can't get into as a U.S. investor. Like that's why I definitely load up on international stock index ETFs. Those are my favorite because it's not easy as a U.S. investor to get exposure to individual companies on your own. It's easy for me to get a single share of like U.S. companies like Coca-Cola, Realty Income, for example. But it's not as easy for me to get access to a lot of those different international companies the way that an exchange traded fund can get. So I deliberately go for international ETFs quite a bit. I have a wide variety of those as well in my portfolio. Tim Smith is asking, who here is selling your furniture on Craigslist to buy the new Michael Saylor ETFs? Can I get a shout? Is Michael Saylor is Michael Saylor actually a fan of ETFs? Hold on. I'm gonna look this up real quick. Michael Saylor, does he love ETFs? No, not ETFs. Sorry, NFTs. NFTs are garbage, by the way. Just want to let everybody know NFTs are stupid. Let's see. NFTs, I swear, are the grift that is. It's the grift that keeps on grifting. Let's see. Oh man, dude, Tim Smith. Yeah, we'll give a shout out to Michael Saylor ETFs. Who knows? Maybe Michael Saylor will promote. This is just a hypothetical, by the way. Maybe Michael Saylor, if he's smart, he'll promote people to sell their homes in order to buy the Michael Saylor NFTs for $20,000 a pop. Also, don't ever do that. Michael Saylor's a grifter. Anything crypto related, Bitcoin or crypto, it's all a scam. Make sure you guys remember that. Scam. Anyway. Dookie Pie says, ha ha ha, nice. Tim Smith says, I got burnt last year trading in my car to buy 2 Destiny NFTs. Oh, man. I think Destiny, that guy should do OnlyFans. Since it wasn't his wife some OnlyFans model or something. I can't remember. That Destiny guy is the most whacked out liberal I've ever seen. I don't even feel comfortable calling liberals anymore because they're just not. They're more authoritarian based than anything. Dookie Pie says, ha ha ha, this guy letting gas rip while he talks stocks. I'm always farting, tooting. Ultra Fire says, you should be proud of your boy, G-Dog. I stocked up on SCHD. That's a good dividend ETF, dude. The Schwab dividend one. I still think you should have more than just, one ETF. That's just me, though. Talk to a financial advisor. But my personal preference is, man, I could never be too stacked up on a variety of ETFs. One, each ETF, for the most part, does pay their dividend on different dates in the quarter. So I'm very much just always looking for, honestly, any company that pays some form of a dividend. Dookie Pie says, yo, we buying hymns on Monday. Oh, you talking about hims and hers or whatever the hell it is? Not a bad one. I think my tongue is getting used to this verde sauce. Yeah, I think I hear the company's pretty shitty for the most part. I don't know. I think it's one of those companies that if they go public, good. If the share price is reasonable, maybe I'll buy a share and just, let it ride, see what happens, and just never sell it. But Ultrafire says I got VTI, SCHD, and Russell 2000. That's not bad. Make sure that you're exposed to international companies, man. Definitely look into some international ETFs. That's my personal opinion. Because one, those international ETFs have a lot of different companies that pay high dividend yields because most of the international companies are taking more of a risk. So a lot of them will pay a higher yielding dividend. And so you get a pretty good dividend payout in those international ETFs. So talk to a financial advisor if you can, but definitely look into those. Not financial advice. Just want to let you guys know. Come on in.
What's up?
Oh, being gay right now. Just doing OnlyFans. Yeah. So we got my boy Nate Dogg in his things and shit, chilling out. And then, oh yeah, if you want, you can set up the table, or I can set up the table real quick. Here, actually, I'll people can see me shake my ass. There we go. Oh, I'm eating those hot ones, Pringles. Got some earlier. It's the verde sauce. If you want, you can try it. Here, it's like, oh.
I brought some loose packs too, so we could actually turn this into like 3. Like we could draft out of it 3 times.
Oh, okay.
I mean, not today, but.
Oh, I see what you're saying. Yeah.
Because the booster boxes I used to get had 36 packs, so between the 3 of us, 4 packs, 12, 12, and 12. But
Got you.
30.
Oh, I see what you're saying. Smart man, dude. Smart man. All right, so I'll finish this off here in 5 minutes. Now, just to polish off what some of the people in the comments were saying. We'll do a quick summary, actually, of the perfect allocation of ETFs and individual stocks. So just like I said, 10%. I'm a hypocrite because I don't really do true weighting because I'm a pussy. But 10% covered call ETFs, preferably the covered call ETFs that use 100% of their holdings as collateral. That's my preference. And it's only 10% of my portfolio, so it doesn't really matter. 30% U.S. stocks, like I was saying. Try to expose yourself to the total market of the U.S. 30% international. The best way to get exposed to international stocks is truly through international ETFs, because honestly, it's a pain in the ass to get Canadian stocks, because I have to be like, oh, I got to be a part of the Toronto Stock Exchange or whatever. I got to sign up for one of their brokerage accounts. And it's like, hell no to that. So I'd rather just get an ETF that gives me instant exposure to all those different holdings. And then 7.5% U.S. bonds. Like I said, the bond market's not hard to get into on an individual basis. You can technically buy U.S. bonds on your own, but it's a lot easier when you get an ETF that gives you a broad exposure to the different bond markets. We're talking about treasury bonds, municipal bonds, corporate bonds. I like junk bonds preferably because they're worthless. But let's see. And then 7.5% international bonds as well. So there's tons of international bond ETFs out there to choose from. Let's see. And yeah, I don't know. I can't think of any off the top of my head, but I got a few international bond ETFs in my portfolio. 15% various commodity ETFs. So here's the thing. You don't necessarily need to get ETFs to be exposed to commodities. It's as simple as buying a bar of gold. As long as you got a safe, secure place to store it, you don't want anybody like myself stealing it from you. I will come to your house and I will steal your gold. I am Ferengi. Let's see. Yeah, and then when I say commodities, I'm talking about a broad range. We're talking about oil, gold, silver, you name it, right? And then that's the complete list. Now, I'm going to eat a couple more of these Verde chips. Oh, yeah. A little spicy. Oh. My goodness, man. Those make me sweaty, dude.
You should bring over, they sell wasabi peas.
Oh, yeah.
I went to grocery outlet and they had wasabi cashews.
Dude.
It's like this big, it's entirely encased in wasabi.
I need to use that stinking coupon that I got on the top of my fridge. I'll probably do that tomorrow. I can't wait to check out the new. Did you go to the new one? Oh, you went to the old one? Okay.
No, this is a while ago.
Oh.
Through the bag, it's so big.
Got ya. All right, folks, we're gonna end the stream. I want to thank Tim Smith for joining in. I want to thank my boy Dookie Pie, Ultra Fire, getting in on there. We got Jack's Cab Confessions, was pretty sexy. Don't forget the members, by the way. Yager's Farm, subscribe to my boy. My boy Martin, he's pretty sexy too. He's all the way from Norway. I'm not going to sell him any used panties, though. I won't do that, Martin. Well, Nathan's disappointed because I won't give him any of my used panties. So, who's the other? Oh, Michael Donaldson. He's another member. Make sure you guys subscribe to my boy Michael Donaldson as well. But I want to thank you guys for viewing this video, and I'm gonna play some Magic cards, and hopefully I get a Magic Carp. But that won't happen. I'm going to bring a Pokemon.